Thanks everybody for joining. Today we have Chris Quinn with Mutual of Omaha. Chris has a couple exciting things to talk about. One thing I'm really excited about is a conventional rehab loan. I don't want to preface it too much because Chris is the expert, but as most of you know, rehab loans have pretty much only ever existed as FHA rehab loans, and they are a pain in the butt. If you haven't done one, they're really hard to do and really hard to get accepted. So Chris is going to talk a little bit about that. He's going to talk a little bit about himself and his company, Mutual of Omaha, and their One Benefit program. And again, I won't preface that too much. I'll just let Chris do the honors. And so I've done a few deals with Chris, and he actually worked with, just a little more history and then I'll be done. He actually worked with Craig as a real estate broker about 10 years ago, Chris?
Yeah, eight years ago.
8 years ago. So Chris was a real estate broker back in the OG days, turnkey real estate, before we were Realty One Group. And anyways, now he is back as a lender and killing it. So anyways, without further ado, Chris Quinn, you've got the floor. I'm not sure if I just have bad signal. Can you guys hear me? I can't hear you.
Yeah, I can hear you just fine. Are you ready to go, Chris?
Yeah, it just kicked me out for a second.
Okay, all good.
You hear me?
So yeah, Chris, go ahead. It's all you. Yeah, all good. So yeah, Chris, go ahead. It's all you. Yeah.
Okay. Perfect. We're with Mutual Omaha Mortgage. It's an offshoot of the Mutual of Omaha insurance program. They started around 4 years ago and have been growing ever since. It's an arm of Mutual of Omaha that they've tried before, and this time they put a lot of effort and money towards it. So we do about $1 billion a month nationwide. I am licensed in multiple states. I can do loans. So if you have a referral or someone's want to leave, Alabama, anything, Alabama, currently doing a purchase in Montana right now, so I can close in every state. The benefit of it is we're a mortgage banker, which means we're not paid on loan amount, so therefore we do not charge an origination. Like Isaac said, we do have what they call preferred lender program. That means is I'm the test subject. They wanted to work with, and we had a loan officer in an office with a bunch of realtors, kind of getting an idea of, helping you guys get more buying power. And what that means is I give you a point. So our company gives you a point. So if you're using a current lender who's charging origination, then right off the bat, we're already 2 points better. So on a $500,000 loan, that's $10,000 right off the bat that we're ahead. The $5,000 can be used, I'm just using a $500,000 loan amount, can be used for buying down your mortgage insurance, or what they call a split premium, or buying the rate down, or using towards closing costs. Any which way, use buying down rate and or mortgage insurance usually gets you about an extra $25,000 to $45,000 in buying power. Just by simply, when you're dropping the rate $75, that's roughly 30, 35 bucks, 35,000. So you figure each $10,000 is 40 bucks a month payment. So obviously, if you can drop an 8 point on rate on 500,000, that's about 40 bucks. So you do that 3 times, it's pretty simple math. So anyways, that's the preferred lender program, or the mutual benefit program. I will say that when it does fill up, it fills up. That means whatever loan officers are taking advantage of the preferred lender program, once that fills up, which means once I am at capacity for the realtors that I can handle, there'll be a referral out to another agent. But the preferred lender program right now is only being offered. I'm the only one offering at this point right now, because I give up a lot of commission, and it's kind of a one of those things we're just test running right now. Anyways, the renovation loan. The renovation loan, first off, we do all loans. We do FHA, VA, conventional, USDA, jumbos, non-QM, which is just non-qualifying mortgage, which is pretty much the subprime. Some of you guys probably have some questions on second homes and investment properties. That is slowly but surely going to be going away from Fannie Mae, Freddie Mac. They are allowing our portfolio, meaning if we do if we do $1 billion a month, they're allowing us to do 30 million in total. They're not allowing us to do very much portfolio business in that regard. So therefore, the non-QM is very huge. We also can broker if we need to. So if there's a really funky loan, or if you have someone who just doesn't have any provable income, we can do bank statement loans. They're not a huge hit. They would what they call near platinum on jumbos. They're just called near platinum across the board. But that is the subprime besides FHA. We are Ginnie Mae direct, which means we do go directly to FHA, VA, which allows us a couple of new programs that Isaac was talking about. The conventional rehabilitation or renovation loan, it's been being offered for quite a while, but the companies that have offered them through our company, one of them being in Planet Home Lending, it wasn't a very good product. It wasn't a product that was really suitable to the borrower. The borrower would have to hire a general contractor or a intermediary, they called it, and that can get kind of expensive, especially when you don't know off the bat what you wanted to do. The renovation loan that we're offering currently, you're your own GC. It's up to 15%. So if it's a, again, we'll use 500,000. It would mean that you qualify for $75,000 in potential revenue or renovation costs. They're not even close to as difficult as FHA 203Ks. First off, I don't do FHA 203Ks. We have a specific couple of guys that handle that in our company, but renovation loans are a lot more user-friendly. We all offer those as well. Renovation loan is something newer in the regards that they're user-friendly now. We can offer them. We've had them, like I said, from Planet Home Lending. We've had a couple other ones from like Flagstar and some other companies like that we've offered, but they just haven't been real easy to work with. To be perfectly honest with you, they were not something I was willing to tackle because, it's a really bad savings account. So that's a new product we're offering. We also, just to kind of give you an idea on jumbos, they run cyclical. As March of last year, everybody knows that's when COVID kind of started getting really aggressive, and quickly jumbos dried up. No one was doing jumbos. They started tightening the regimen or the numbers like rates, fees. Things started getting a lot tighter around March, April of last year. So we've seen it get less and less. So now there's there's a lot more jumbos. There used to be 2. Now we have at least 12 companies we can go with on jumbos. Used to be 1.7. Now we can go all the way up to 12 million. Let me think here. Yeah, so the renovation loan was the thing that was the most up to date. There's also construction loans. Everybody knows about the construction loans. Everybody's probably heard of either Banner Bank. It's the best place to go to, or you can do one through Flagstar. We're actually offering now a new product. It's kind of been in and out of funding, which is called a one-time close, an OTC. And a one-time close goes for FHA, VA, and conventional. Just like the percentages of down, it requires 0% for VA, so you can literally do a 0 down VA construction loan. You can do a 3.5% FHA, and you can do a 3% conventional, as long as you qualify for the mortgage. And it's got a 9-month quote unquote shelf life, so the loan's able to go through for 9 months. So it means if you're doing a manufactured home, you want to make sure you're preemptively doing your due diligence on how long the manufactured home is going to be out till it's constructed at the factory. There is no payments on it until your loan closes. It's kind of not like a draw, like a regular construction loan has draws. A one-time close is just very simple. The money starts getting drawn out but there's no payments on it till you're actually able to inhabit the building. So, or the structure. So that's kind of a new product. It's kind of been niche-y. I have not been able to offer it yet because each time we get ready to offer it, the money gets pulled from it. So I was assured that there's enough jumbos at this point that we're able to jump in and start offering those here anytime now. So it's kind of a case-by-case basis. We can do them as a brokered out loan through a company called Mid-America. Anyways, that's the construction loans. And on conventional, everybody's heard of WA bond. So WA bond, just being the Washington State Housing Finance Commission, is offering the zero money or the down payment assistance program with elevated rates to cover the down payment. There's also, our company offers a thing called Shinoa. Shinoa is similar to WA bond in regards to instead of having just like two programs, they have different programs within it, like FHA and conventional. But they have some like the down payment assistance through WA bond now offers a 5% down on FHA, so 1.5% towards closing costs, 3.5% towards your down payment. They also, on Shinoa Fund, if you have a client who doesn't meet the standard numbers for WA bond, which means they make too much money, or maybe they make too much money but their DTI is a little tight, or let's say they got a 600 credit score. Well, WA bond caps you at 620. I think it's maybe 640. Shinoa Fund will go up down to 600, and then obviously there'll be some overlays regarding reserves and things along those lines. But it's another avenue if you have a turn down and you want to see what their options are. The Shinoa Fund kind of allows us for strategic ones, and most of the time it's the income one that people don't. There's no requirement for income, so you can do a down payment assistance and they make over the median income, they can still qualify on the Shinoa Fund down payment assistance. Rates are very similar to Shinoa Fund. So anyways, that's kind of what we have offering right now. The mutual benefit program, I will circle back on that one real quick. The mutual benefit program, what it is basically helping you to get buying power, but also more importantly, to kind of show you how Mutual Omaha works. I do have an assistant. If any of you guys have been in the office, you might have met Kaylee. She's in here about 2 days a week. Right now, she's kind of she's working from home, but she helps to maintain how fast we move through the transactions. She's basically the go-between between the processor and myself. Once the process starts, Kaylee is very influential in getting the loan closed. She's the one that keeps it on track and works alongside with the processor to get all the stuff ordered. We have a very efficient system. We've done some bailouts in the past where we've done some bailouts for people and have closed loans in days that are a little bit ridiculous. We close the loan up in 12 days from start of the appraisal to the finish. So it can be done. We close stuff on average between 2 and 4 days early, depending upon the listing agreement, if people are open to it. We have a very efficient system. Our corporation with Mutual Omaha is very focused forward on purchases. Refis take between 5 and 6 days to be reviewed by the underwriter. On purchases, it's 24 to 48 hours. And so a lot more preferential treatment towards purchases. And we just have a very smooth process. It just goes through very quickly, great underwriting, great processing, and then help all in between if we need to have a rush. So that's kind of the long and short of the mutual benefit program. Is something where if you want to take advantage of it, what you can do is you can just give me a call. If you don't have my number, Isaac can probably get it for you, or I can send you an email. My email.
Yeah, Rachel will just include all this and
send out also.
Yeah, she'll just send it all out when we in the recap email. So you're all good there. Yep.
Okay, so if someone wants to take advantage of it or has a question, question I just got last week was, I got a person pre-qualified for 350 and the house they're looking at is 385. I don't know until I look at it, but after running some numbers, I can see where we're close to, how close we are, and just running an automated underwriting to see whether or not it's something we can actually do. But like I said, yeah, it's case by case, but we do every loan. There's not a loan that, if we can't do it, and I'm not trying to be cocky, if we can't do it, then nobody can, because we offer every single program that there is known out there. Well, I apologize. There was a funky loan here recently, and we don't need to go into detail on it, but it was this retirement loan. I couldn't do it. I don't know anybody that can do it besides the company that offered it. That's the first time I've ever seen a loan program that I couldn't do. And so I asked them, and they just were like, that's a portfolio loan. We don't do a ton of portfolio right now. So we will, but we're very picky and choosy on which kind of portfolio loans that Mutual Omaha will do. But pretty much you name the loan, we can attempt to try it. We do have referrals for reverse loans. I do not do reverse mortgages, but we have an entire division that does those. I focus and spend most of my time on purchases, and then obviously I handle refinances quite a bit. So if you have any questions or you want to see how that program works for you, you know, I'm not trying to take away the business. If you've been working with someone for 2, 3, 4 years or whatever, and you're really happy with who you're using, at the end of the day, it's not a matter of loyalty. It's a matter of, you know, if I can do something that makes your client happier and get it done, and gives you more buying power, you know, great, use me. If you can't, if you're just real happy, you want to have some questions, whatever, you know, if you just want to bounce something off me, give me a call, send me an email, whatever needs to be done. I am working with, I'm not going to name names, but I am working, I'll name a few names. I mean, because I already asked if it was okay. I'm doing business with Isaac. I've done some business with Craig, done some business with Rhonda. And then also subsequently some other people in the office tested me out, wanted me to check out, you know, maybe have me do their personal loan and then seeing how legit we are. And then, you know, kind of going from there. So once you get a chance to use me, it's very user-friendly. All of it's tech, meaning we use an app on my phone. So if you're texting me on a Saturday night for a pre-approval that's specific to the address, it takes me 30 seconds. You're not inconveniencing me at all. It's done via an app on my phone, and I can change things directly, especially if I know the file and I know, yeah, I'm not too worried about it. You're at 40% DTI. I know I can go to 45%. I can change it as fast as I need to. Not to mention it's something that you can hand out to your clients as well. And it kind of makes for a little more seamless transition. Lastly, on that app, the new scanner is your cell phone. Taking pictures of your documentation and uploading it through our secure app is also a very user-friendly way of doing things. So that's why I'm able to do multiple states as well. It's just very simple and very easy to work with. But yeah, that's what I have to say. Isaac, I think you had a couple questions that you were going to throw at me.
Yeah, mainly I just wanted to, I wanted to recap really quick about the mutual benefit and how that really translates to you and your clients. We all have worked with clients who need the seller to pay their closing costs. They don't have a down payment in their closing costs. So, and that's very difficult to get those offers accepted. So what I would encourage you to consider is try Chris out on one of those, because imagine how much easier it would be to get one of those buyers accepted if you didn't have to have a seller pay all their closing costs, but instead we're talking about maybe 1% because Chris is covering 1%. It's pretty crazy. There's not, I don't know of any other lender offering this, and this is why we invited Chris on today.
Yeah, it's a program that, like Isaac had said, I broke into the industry in mortgages in 2005. My background, without going into crazy detail, is I was doing finance at Mercedes-Benz in Fife and had done sales and finance in Montana, where I had moved from. I'm originally from here, moved to Montana, got into finance in Montana, moved out here, was working for Mercedes-Benz, and then one Saturday, all these guys kept buying cars cash, and I was like, what the hell do you guys do? And they were all in mortgages. And I was like, God, and I didn't know anything about mortgages. So I got into it and then got out of it in 2012, got into real estate when it was just turnkey, not Realty One, just turnkey with Craig and Rhonda and a couple others, and got into real estate, did that for a couple of years. Just wanted to do something different, and then got into something else, and then got back into mortgages years later. But nobody offered us back then. Back then, it was just whoever brought you an offer brought you an offer. You didn't really care about it. But now, more recently, you know, it's very important who you use for your lending, because oftentimes, you know, I get tons of calls from realtors saying, hey, how are, you know, wanted to make sure you're actually live. You weren't a call center person from Detroit, Michigan, you know, such as like Rocket Mortgage, and wanted to make sure you're actually real. You can send off an email. It's calling me at really, really funky times, especially during football season, calling me like on Sunday Night Football when the Seahawks were playing. It was odd. I was like, who the hell's calling me on a Sunday night in football? But it was a test to see if we're legit. And yeah, we're legit. We're local. Everybody thinks we're out of Nebraska. We're actually not. Our headquarters is out of Lombard, Illinois. And then, yeah, so the mutual benefit program it's huge, because I mean, you get 1 point towards your closing costs, but more importantly, if they want to buy down to the rate, that's pretty good buying power to buy your rate down. Plus, also if they want to split MI, so it just gives you more buying power, gives you more options. But yeah, like I said, just give me a try. Once you try it, you know, if you like it, you like it.
Awesome. Well, thanks, man. We really appreciate you jumping on the call today. And yeah, Rachel will include your information in the recap email.
Perfect.
Yeah, thanks for joining us, Chris.
Absolutely, anytime. And if I have a new program come out in the next however long, yeah, I'll let you know. And if it's something that you guys want to have on here, I could just do like a little 2-minute speed, or just tell you, like, here you go ahead and let people know, or I can send out an email, whatever's easiest. So we have new products coming online all the time, just new and exciting, cool stuff. So yeah.
Cool, man. Thanks.